Hey, welcome back to Fox Business Live. It is about 12:13 on the East Coast. Good morning to those of you out on the West Coast watching. The Dow's down about 37 points right now, and the boards were burning. We thought we were talking about gold. It's here. Everyone gets so fired up about gold.
We're talking about gold.
I don't get it. I don't get it.
Who thought we were talking about gold until now? Now we are talking.
We're talking about gold, and thankfully David Morgan is here, founder of silver-investor.com. That's the website, right? Silver-investor.com, in case people want to check it out. David, we got gold prices. I mean, clearly you got to be somewhat optimistic about gold at this level.
Well, it's broken the psychological barrier at 1,000. It's held that level pretty consistently. It's dipped down once here recently. And really on an inflation-adjusted price, we're not even near the all-time high of $850 in January 21st, 1980. At that time, the $850 price in today's dollars is about $2,300 the ounce. So I think we've got a long way to go in gold.
So you think 2,000?
I do think 2,000. I don't think it's day after tomorrow, but I think eventually you will see that price level, yes.
How much of this move that we're seeing recently is a function of the secret talks that are not so secret between the Arab nations, Japan, Russia, Brazil, France, some of the others, about ending the dollar denomination of oil and including a basket which includes gold to denominate oil?
I do think that had some impetus to move the market further yesterday. There is some question about the reliability of that piece that was in the Telegraph, or excuse me, in the Independent. And I'm not sure that it's factual or not factual. There's a video I put on the website, if anyone cares to look at it, that actually was very balanced. It took both sides. It actually had the author of that article from the Independent giving his case.
So what's your outlook overall for these hard metals? I mean, we got silver, we have platinum, titanium is in the mix too. What should people be looking at these days?
Well, I'm a metals head. I do believe that the commodity sector is a long-term bull market like Jimmy Rogers believes. I also believe that the metals, primarily the precious metals, are the top tier of the entire commodity sector because both those metals, silver and gold, have been money throughout the ages. And whenever you have a dollar decline like we're witnessing, and it's a global-based currency really since it's the reserve currency, I think it spells trouble longer term, not that we can't get through it, but that it yields higher prices in the long term because basically silver and gold are the only thing that you can buy as an investor outside of the system that will preserve your wealth.
David, silver also has industrial uses. I mean, if because of that, maybe all things being equal, and then you look at the performance of both silver and gold, do you like silver right now because of where it is relative to gold and the fact that it does have those uses?
Absolutely. It's like a stock company or a company on the NYSE that's buying back its own shares because the industrial component of silver is about 54% of the market. Better than half of the market in silver is industrial usage. So they're constantly buying regardless of the economy. Certainly when things slow down, there's less bought, but overall it's fairly consistent. And then on top of that, you add investment demand, either good times or bad times. So you've got a very good push for silver. I think it's undervalued relative to gold right now.
David, as a way to play this, do you like the ETFs, GLD and SLV, to play these two as a way to get an investment that you can buy and trade on the New York Stock Exchange, yet at the same time has the underlying asset itself as its value?
Well, I want to be consistent here. I think as long as you have the physical metal that you need for your personal well-being or sleeping at night, so to speak, then if you want to move into any of the ETFs, it's certainly your choice. I think they've probably done more good for the awakening of the metals as an investment vehicle than anything else that's come in a long time.
David, I got a question from a reader. He's wondering about Russia's depletion of palladium. Palladium also a hot metal these days. So what happens in that instance?
Well, palladium and platinum are the rarest metals on the planet. And we've already seen palladium go from the $200 level over to $1,100 one time fairly recently. It's a very thin market, a very tight market. Certainly if Russia does play a very big influence, the only other major palladium mine is in Montana, the Stillwater mine. So you got to be careful in those really thin markets because the price can move around a great deal. But certainly if his thesis is correct and Russia is going to not produce the amount, it certainly would yield higher prices eventually.
Weak dollar equals stronger commodities. Gold, oil is up. We've seen almost this direct inverse correlation here over the past. You can go back however far back you want to go. Will that continue And at some point in time, does that correlation break down a little bit in your mind?
Well, it always has broken down in the past. I mean, China had a paper money system 8 times, and it failed 8 times. So I think eventually there's going to be some type of a gathering of maybe the IMF or the Group of 20, and they're going to come up with some type of replacement for the dollar. We're already seeing that in the mainstream press outside of what was written in The Independent recently. So I think that is longer term. I also believe that we're going to see the dollar decline rather subtly. I don't think there's going to be a hard crash in the dollar. Nobody wants that, as your previous guest said. There's too much of a vested interest on a global basis for the dollar to maintain some kind of strength, regardless of the overall premise that it is going to decline over time.
David, we hit a new record today for gold, $1,049.70. This is a new record. This seems to be on a tear. Call me skeptical, call me a nervous investor, but I'm worried that this is just puff, a lot of air, a lot of momentum trading on this. You think there's any backing to this move?
Well, okay, first of all, it's a nominal high. It's not an all-time high, as we talked about earlier in the show. Secondly, I'm agreeing with you. I think we could see maybe 1062 or so. The commercial interests, which really are correct most of the time in the futures markets, in the commodities markets, these are the producers. They're massively short the gold market right now. I do believe we're probably going to see some type of correction. Now, whether it's going to take us below 1,000 or not, we don't know yet. But I'm in agreement with you. I think on a short-term basis, we're probably getting overbought here.
You know, they say that when your cab driver or your mom or somebody like that says, I'm going to buy gold, that's when you know it's over. I kind of think we're getting close because a lot of people are talking about owning gold.
There's very few of my peers that are with me as far as where we are right now, and I'm one of the few that's somewhat bearish at this juncture.
Yeah, you also see a ton of TV commercials too, David. I mean, every time you turn on the TV, you've got somebody else, we want to buy your gold. Just put it in an envelope, send it to us. We'll send you a check. It'll get there in a couple of weeks. That also makes me nervous because that makes me think, boy, everybody is just way too bearish on this thing. And gold, correct me if I'm wrong, David, gold has a tendency to swing fairly violently up or down and have some pretty steep cliffs. Am I not wrong on that?
Well, gold moves, has some pretty good volatility. Silver is the one really that has massive volatility because it's a much thinner, much smaller market. So gold, like, let's take the 9/11 situation. When that happened, gold surged 7% in one day. Silver surged 11% the same day. If you go back about 2 weeks after 9/11, silver settled back down to where it started, and gold fell off, I think, about 4 or 5%. So these metals can move rather rapidly depending on the circumstances. But gold is less volatile than silver is, but they do both move rather rapidly at times, sure.
David, I have to tell everyone one of the anchors here, Dagen McDowell, sent her gold in.
Yeah.
And ended up just to see how much they would give her back, and I think she ended up with like 25 cents on the dollar. So be very careful and very wary of that stuff out there.
The mail-in gold programs are not your benefit. However, if you've got an earring that doesn't match or broke a necklace you don't want and you don't know what to do with it, certainly you can cash it out, but you're not going to get the full gold price, let me tell you.
25 cents is better than nothing, right, David?
That's right.
I guess. Thanks, David. We appreciate it. Good to see you.
Thank you.
David Morgan, founder of silverinvestor.com. I don't know.